Let's start this video with a question. Which is good for an economy, inflation or deflation? Let me simplify these two terms. Inflation simply means increase in the overall prices of goods and services, whereas deflation is just opposite to it, and it refers to decrease in the prices of goods and services. So common sense says that it is the deflation which is desirable for an economy, since it decreases or reduces the prices of goods and services. But if you too think that deflation is a good measure for an economy, then you are totally wrong here. Let's understand the whole concept with the case study of China's economic crisis as it slides into deflation. Namaskar, I am Harsh and you are welcome to InsightEd once again. Before proceeding with the issue, we need to understand some concepts of economics. The first is Consumer Price Index, CPI. It refers to the change in the prices of goods and services. Simply understand, if CPI increases, it shows inflation, and when it decreases, it shows deflation. And second term is demand and supply. A veteran economist, Thomas Carlyle, said that teach a parrot two terms, demand and supply, and you have got an economist. Meaning that if you understand the relations between demand and supply, you have become an economist. The more the demand, the more the supply, and vice versa. Now coming to the news. China's economic crisis has been in news for the time period of pandemic. The prices of goods and services are decreasing. People are purchasing less, affecting the demand and supply chain. According to the report, consumer price index fell by 0.3% last month. China's exports fell by 14.2% compared with the last year 2022, while import dropped by 12.5%. Now we shall understand the causes of deflation. There are a number of factors that can cause deflation, and the first is when supply increases but demand remains constant. When companies start producing more goods than required, it also leads to deflation or decrease in the prices of goods. You can relate this with a day-to-day example. When tomato was sufficiently available in the market, its price was low. Second is when people start saving more and purchasing less. It also affects demand and supply chain, and company has to reduce the product's price to be purchased by consumers. And third is interest rate charged by central bank of the country also affects the circulation of liquidity in market. When interest rate is high, people have less liquid money and are more likely to purchase less. Liquid money, you can relate this with cash money. Now we'll talk about repercussions. You might be thinking how deflation is linked with recession, or in simple word, economic crisis. For understanding this, we need to understand demand and supply chain. When consumers purchase more goods, company has to produce more products. Or in economic terms, when demand is high, supply is high. And when people save more and purchase less, company either stops or decrease its production. This leads to laying off employee, leading to unemployment, and this also affects the primary sector. For example, farmers, small producers, etc., who provide raw material to the company. and it also affects the people who are directly or indirectly associated with the company. In this way, this leads to recession. Discussing the last point of this video, how China's deflation affect Indian economy. Positive and negative both types of effect India will face. First, we talk about positive effect. If investment in Chinese economy is lowered owing to the increasing slowdown of their economy and now deflation, India can potentially emerge and take over as the manufacturing hub for developed countries. China has established its monopoly over manufacturing sector, and now it is the time for India to take over China and become the next manufacturing hub. For this, economic reforms should be accelerated for attracting foreign industries and investors to India and make it the next manufacturing hub. And now we shall talk about negative impacts. It has some negative impacts also. China, being a major exporter of consumer goods, can increase the prices in other parts of the world. So we can conclude that moderate inflation is better than deflation, and India has an opportunity to make it the next manufacturing hub through attracting foreign investors and foreign companies to India and use the best out of this opportunity. So I hope you must have enjoyed this video and have learned a lot new things. If you like this video, please share and subscribe to this channel. Thanks for watching the video till the end. Stay curious, stay engaged, and above all, stay insighted.